Hello everyone, myself Vaibhav. In today's session of Market Movers, we will be looking at the S&P 500, which has rallied substantially higher and now it has consolidated around the 3,650 price level for last couple of sessions. And I feel after this ongoing rally, this might be the time for minor correction. So we will be taking a look on that aspect as well. So let's get started for today's session. If you consider the data docket, earlier in the day we got the PMI releases for the China, and here if you consider the manufacturing PMI as well as the non-manufacturing PMI, the expansion is pretty robust in China compared to the other major economies. In case of the NBS manufacturing PMI, the reading for the month of November stands at 52.1, which is higher than the prior month's reading. And non-manufacturing PMI is also higher for this month at 56.4. And these are NBS numbers for other countries which are still suffering because of the ongoing coronavirus pandemic. Later in the day, we got the inflation data for the Germany, and here, as expected, the Germany's economy is still in the deflation, and in terms of year on year, the reading is at minus 0.3, and in terms of month on month, the CPI stands at minus 0.8. So this is happening as the demand has crashed, and not many consumers are willing to go out and spend the money because of the uncertainty on the economic front. For North America, we are scheduled to get some releases, and these are minor releases, not much is there to be read into. And I think the thing release which we will need to watch out for is going to be the Dallas Fed Manufacturing Index for the Texas. And here some moderation is being expected after the strong gains which were seen in the prior month of October, and for the month of November we might see the reading coming close to 10. The pending home sales and the Chicago PMI data was also released, and here not much of a change is there compared to the prior month's reading, so I will not really go into the details of that. So let's now turn our attention to the technical aspect. First we will see what's happening in the S&P 500, and then we will also see the technical outlook for the USD JPY. Let's get started with the S&P 500's technical outlook first. This is the daily time frame chart, and here the consolidation for the S&P 500 is happening closer to its all-time highs, and I feel given this substantial rally which has already taken place, if we see some sort of correction happening on these levels, it shouldn't be surprising, and from medium to long-term perspective, that might even turn out to be a opportunity. But for short term, I would prefer to go with the scalping kind of trading opportunities instead of going for the swing trades. And the risk reward ratio also looks fairly well in our favor. So we will see what we can do using the lower time frame chart. Here, as you can see, the S&P 500 has been restricted just below these resistance point, the second resistance of this month P1 point series, and for last month, for this month, it hasn't really been able to cross and hold above this resistance zone, and this time around also, we are seeing that the S&P 500 might decline to this prior support zone, which is there around 3,550. So looking at that possibility, I think we can keep in mind this regression curve also, which is still inclined on the higher side, and because of that, not a major move is being expected on the lower side. Of course, that can happen, but for us, we are targeting the small moves here, and I think the scalping technique might work perfectly well. So if we utilize this formation of three SMAs, we have this confluence zone being created closer to this 3630 level. We have these 50 SMA and 100 SMAs converging closer to that. And if we consider the price action today, we saw this declining starting closer to the prior resistance zone, prior swing high, and it went all the way closer to this 200 SMA, where it rebounded to some extent. But as the US session is getting underway, we are again seeing renewed selling pressure coming in and pushing the S&P 500 lower. Because of that, I feel the S&P 500 might remain in pressure in today's session, and in the latter part of today's session it might even try to break below the 200 SMA. And if that happens, maybe by tomorrow's session we will have bigger opportunities emerging for us to go for the corrective trades in the S&P 500, and maybe for tomorrow we can even look for bigger target prices. But for today's session, the entry should be anywhere closer to this confluence zone of 50 and 100 SMA, while keeping the stop loss closer to this day's high around 3655, and that will entail the risk of around 1 percentage point. And on the lower side, the reward is not going to be that big. As I said, we are not really targeting big swing trades here, and as a result of that, the opportunities are also going to be fairly sharp, and we will have to be content with that. And first target will work out closer to this 200 SMA, the price zone around 3600, and we will have to see how the price reacts after getting there. And if we see the break, then maybe we can continue to hold on to the short sell trades. But otherwise it will be prudent to book a half position and then keep half of the position open for further decline. And if that doesn't really happen, then maybe we will not be making much money in this trade. But by tomorrow we will have a better picture, a better opportunities emerging for us if things hold out, and the anticipated price zones work out in our favor. Now let's shift our attention to the USD JPY's technical outlook. This is the daily time frame chart, and the USD JPY has been in a downward spiral on the daily time frame chart. But one important thing here is that on the daily time frame chart, the USD JPY has found support closer to this prior swing low, and even in today's session, it has rebounded twice from these lows established closer to the prior swing low. And as a result of that, I feel the turnaround on the shorter time frame is possible in the USD JPY, and if that does happen, maybe in next couple of sessions we might even see it retracing higher towards the prior swing high. The price levels of 105 are pretty much in sight. So if you want to look for trading opportunity in today's session for the USD JPY, I feel we will have to be mindful of these support zone of this pivot point series. Of course, today is the last day of this month, so tomorrow we will have the fresh formation, and that will give us more clarity. But for the time being, we have this support zone coming into play around the 103.8 zone, and this time around also it has provided decent support for the price action, and we saw this rebound happening after making a low closer to the 103.80. And looking at the price action, there is this possibility of USD JPY consolidating here and then maybe retracing even on the higher side, so that will open the prior swing high zone of around 104.7 for us if we are going for the long trades in the USD JPY. The regression curve has flattened to great extent after this consolidation phase, in which we have seen the USD JPY consolidating just above the 104, and this formation here has also been of higher highs, and this low is also higher, so the formation is turning out to be of higher highs and higher lows, and that is one thing which we can utilize for determining the trading outlook. So moving on to the lower time frame chart of hourly, we have this confluence zone around 200 SMA, and that is going to be the crucial price area for us in today's session. As of now, we are seeing some buying momentum on the lower side. As I said, that we are finding the buying on the lower side, and the USD JPY is respecting the prior support area. And as a result of that, the possibility is emerging that if the USD JPY is able to hold well above this 250 SMA convergence, then maybe in due course of time it will even cross above the 100 SMA, and that is going to be a crucial development, as that might shift the outlook from bearish to bullish from the short term perspective. And for that matter, we will have to watch out for these price action closer to this convergence zone. And if in today's session it does closes above this convergence zone of these two crucial SMAs, the SMA 50 and the SMA 200, then I feel tomorrow onwards we might see the start of move on the higher side, and in due course of time, maybe by the latter part of this week, we might even see it approaching this prior swing high established around 104.7. So let's see how things shape up in today's session, and depending on that, I think if we see the price action holding well above these 200 SMA, then even in today's session we can go for buying opportunities anywhere closer to 104.10, and the stop loss can be kept closer to this immediate swing low, which is there around 103.8. So for a risk of around 30 pips, we can target 60 to 70 pips on the higher side. So this will be a trade which will indeed give us the risk reward ratio of 1:2, which was not the case for the S&P 500. So compared to that trade, this trade might work out better, but as of now, we will have to be a bit patient here, and next couple of hours will give us more clarity. So watch out for that. So that's it from my side for today's session. If any of you have any query or any idea to share, you can write it in the comment section, and I would be more than happy to take the discussion forward. Before I sign off, I would also like to remind of the risk associated with trading in the financial instrument, and one should be careful while using the information provided. Subscribe to the Ducoscopy webinar channel to keep afresh with the happenings in the financial markets. Thank you all for joining in. Goodbye.